Good day, everyone. This is Patrick from EasyFX Gold Trading System, and this is Saturday, the 2nd of July, 2022, and this is the weekly technical analysis for spot gold and dollar yen for the first week of July. Let's begin with spot gold, and let me expand this. On yesterday, Friday, there was a significant dip to test the swing low and quickly rebounded after that and climbed back above the support level at this 1800 level. And it has been declining throughout the week since the start of the week on the Monday, where it initially gapped up, but then pulled all the way back down and drifted lower throughout the week. So if we take a look at the weekly time frame, you can see that it's has dipped lower and tested the swing low before climbing back up towards the end of the day. If we go to the 4-hour time frame, you can see this clearer from yesterday, where it was dropping all the way down to dip below the 1786 level, and it went down to the low of 1784.53. So dip below 1785 before closing back up and climbing up the last 8 hours of the day and the week, and recovered somewhat. But yeah, it did fall out of this consolidation zone of the past 2 weeks. Let's extend this support level now. So there's going to be a key support at 1800. It's threatening to dip lower. This is the resistance zone up here. And of course, the key one is well above at 1900. So let's clear this block here. So throughout the week, it has been drifting lower along with the other major pairs as well against the US dollar. US dollar has been trying to push up higher again. And it's coming up to the support at 1780. So it did hit exactly down there, exactly this trend line. It dipped down to test that trend line, so it bounced off that level. So it didn't quite make it to the 1780. So this is a critical area now. And if it does break down lower from 1780, that's going to open up further areas below that down to 1750. Okay. So that's a very precarious situation now. And this coming week, there's non-farm payroll right at the end of the week. There's also the FOMC meeting minutes that we released. But right at the start of the week, it's a holiday weekend, long holiday weekend with the 4th of July. So it'll be a shortened week for the US traders. Change this to something where we can, yeah, you can see through this better. And we probably need to mark a key support below that, this region, at this swing low. Yeah, it's going to be a critical area of support, along with the 1780. Okay. So in the moment, it's drifting lower into a descending wedge formation, and let's see if it's able to climb back up above that and break above this upper trend line. Otherwise, if it's going to continue lower, then it's going to test this support region, and if it does break, then that's where we'll open up further support below that. All right, next week will be key with the non-farm payroll as well by the end of the week. Let's add that upper trend line so that we can see that area of resistance. And yeah, we can add this as well for the lower trend line. All right. So let's compare this with the US dollar index and see how it looked like, whether the US dollar did indeed push up higher and test its resistance. And we'll come back on dollar yen. But for now, this coming week, it's a critical one, and it's looks like it needs to climb up above this 21 pip retracement level. Otherwise, it's still stuck below around the 1800 region. That's trying to recover from 1800. So it's really testing the lower support area. All right. So here's the DXY, and it did start to find support right from the start of the week after dipping towards the 50 pip retracement, and climb up very strong in the early half of the week on Tuesday and Wednesday to finally test the 105 again before pulling back. But then on Friday yesterday, it did attempt to push up above 105 again and reach a high, reached a high of 105.35. So it did attempt to recover and climb up higher, but still restricted at the 105 level. So this is still a key resistance zone, resistance level. So it's attempting to climb up above and trying to reach the next hurdle at 106. Support is still right at the 50 fib here. So that was the key support level. Move this one out for now, as the 55 EMA is rising up as well. So that's a critical support now. And it did break out this symmetrical triangle after dipping lower, but it managed to recover that. So that was broke down and recovered up and broke up higher. So let's see if it's going to be able to continue higher for this week with the non-farm payroll. It's Friday. And we'll see if it's going to test the 105 again and try to reach 106, or whether it's just going to be limited by this swing high at 105.54. And looks like there's clearly signs of slowdown in the economy as well, with the Wednesday's final GDP figure coming down slightly lower than expected as well, even with the negative growth at minus 1.6%. So there's fears of a recession coming up. We'll see what the next quarter figure is going to be. So for now, let's leave it as such, and a major confluence above that, but that's later on if it does really break out higher above the 106. And perhaps we can move this to at the resistance level. Okay, so let's head back to the other major pairs and take a look at the response from the other pairs as well. All right, let's move back to dollar yen, and it did break out above this intermediate resistance, and right from the start of the week at the lower end of this consolidation area, and climb out to test 137, touched it, and then pull back for the rest of the week, and back into this area of 135, and which acting now as support. Let's move this for now, but for now we'll just leave the support at the next key level at 133. And above that, the resistance still at the 162 fib extension above the 137, and which for now is acting as resistance. So 162 fib at 137.57. Let's see if it's able to climb back up to test that level again, and but it has returned back to this previous swing high, and this is a critical swing high area from way back of 20 years ago. So after the previous week, actually we look at the monthly, might as well look at the monthly close for last month, and that was a strong bullish move after a pause, and where it started 2 months of strong bullish moves since March. Paused in May, and then continued higher in June, and a pause now. Just for this first day, we'll see if it's going to be a pause and a pullback for July. So whether it's going to extend further as well. Okay, going back to weekly. And momentum has slowed down the last couple of weeks with the spinning top and the doji. And last week it did just test this 137 level before pulling back. So it is slowing down slightly for the week, and although it did attempt to break out higher for this week above this swing high area. All right, but anyway, clearly it's been bullish for quite a number of months now, for 3 months already. This area is definitely a strong support with the last swing high here, and we're at 131.35, and just above the 131. That's the strong support level. So let's see if next week there's further bullish move with the non-farm payroll. Just mark this level as intermediate support level here. So this was ranging of about 270 pips. Okay. So we'll see if there's any trigger bounce to break through this resistance at 137, and to see if it's really going to test this resistance, or it may just wait another week or so until the next FOMC meeting. Okay, so for now, let's leave it as such. The pretty much key resistance levels are still the same. Critical week again for the US dollar and for the other major pairs. Okay, so do check out my other videos on the other major pairs, and have a safe week and a good trading week, and cheers for now.